Good morning, everybody. Welcome to the Good Old Flow Show. Here we are, Wednesday, the 12th of November, middle of the week. I can't work out if this week's going slow or fast at the moment. In a bit of a grind. Morning, Kay. What rut are you in?
Morning, Ryan. Yeah, the grind is probably the right word for it. But we are already halfway, so we could argue it's going pretty fast still.
Yeah, it's all downhill from here. So, in that part of the week. Right, let's get going, get through some of the headlines. Starting off in China, Goldies have moved their rate cut forecasts. They were expecting a cut coming this quarter, Q4. They now see one coming in Q1. I'm a bit up in the air. I thought too that we could possibly get a rate cut. There's still time, but perhaps the data, most recently that CPI data, may stay their hand for a while longer. Over in Japan, and I haven't even got my calendar set up yet. Boom, boom, boom. We've had a bit of data out of Japan and some good numbers. The Tankan index jumped to 17 from 8. Previously, non-manufacturers, though, were unchanged at 27. Forward-looking index for February was up at 15. Non-manufacturers staying at 27. So apparently that's the highest in quite some time for that number there. And that is a number that the Bank of Japan look at. So that's good news for them. We also got machine tool orders for October, the preliminary number coming in up 16.8%, blasting the 9.9 expected. So good news upon good news upon good news. Perhaps not so good news for the new finance minister. Katayama is what's going on in the yen at the moment, because we're seeing yet more weakness. Again, we're getting some really, really high DEFCON level comments here. Says she's watching excessive and disorderly FX moves, seeing one-sided rapid FX moves, watching with a high sense of urgency. But also says we can't deny that negative parts of the weak yen is becoming clearer. Kay, yet again, a lot of rhetoric for we're not really in that zone as per other administrations. You know, we're not seeing 200-300 pips a day. We're not even really got the volatility. I don't know where we are on the speculation front, but yeah, the picture doesn't fit the paintbrush.
I think we can safely say that we are in speculation territory. Looking at the price action despite the better numbers, but that's all down to the government, who is now really bringing out the bazookas and compiling package upon package. It's not only the budget, but the supplementary budget is already been talked about as well, and that's what the market is trading. We also see whatever they come up with. It's good for the Nikkei. We know the correlation between the Nikkei and the yen. Yeah, it's all ignore the numbers now and look at what the government is doing. But they have their work cut out. Yeah, we were talking about that yesterday afternoon in the room. They're pretty. Those people are not stupid, right? And they have been in markets. They have been already in governments. A lot of those government officials now, they have already been there under Abe, had the Corona Abe experience as well, and they know what's going to happen to the yen if they continue to put packages and support in place, because the support is really widespread. Yesterday they were talking about using public money to reopen nuclear plants, or to build actually new ones. Today and then before it was defense. Today they were talking again about helping companies to alleviate the blow from higher tariffs. I mean, it's going to be across the board. it does look like a big bazooka. So they know what's going to happen to the yen if they go through with all of that, which is now very, very likely. So yeah, I think the Ministry of Finances needs to be in markets at least actively doing the verbal intervention, because otherwise the yen is just going to crap the bed,
Yeah,
regardless what the numbers are now. The thing is though, but that's then for further down the road, is if Takaichi succeeds and her team succeed in having better growth further down the road, but then you're talking maybe about the second half of 2026, we are going to see better growth, and then the yen is probably it could be turning around in a more natural way. Uh, with Bank of Japan probably having hiked at least once more. But they are still at very low levels, as we have already talked about. So it's a hard job for them to contain the yen right now.
yeah, and for all of us, everyone's asking or starting to ask, when's intervention coming? Okay, if this was under the previous governments, I'd say we are sort of halfway there, just over halfway towards intervention. But the way these guys are speaking, I think they're closer to 3/4, 80%, 85% of the way to intervention. So
Yeah.
I would not be surprised the way they're talking that, if we break up through 155 and shoot quickly to 156, they're going to be out and about.
Hmm.
So I think we are potentially closer to intervention than we would be normally. So if you're long yen pairs, you need to factor that in, and I'm doing just that at
Yeah,
the
me too,
moment.
man. I brought my euro yen stop up, and I've taken slices off. Um, better be safe than sorry afterwards. And the thing is as well, and we have been talking about it, as I said yesterday afternoon. The thing, there's two things here. That first of all, it's better to stop the rot before the market really um, goes like full gangbusters now selling yen, meaning that any intervention later, I mean, imagine that they wait again for 160 or 162. The intervention is going to bring it back to where we are now. Uh, but if you start early, you're also going to psychologically drive a portion of speculators away, because they are going to show that they mean business, right?
Yeah.
Not like the prior administration, who just intervened because the market was completely running away. If you do it before, you already calm down the nerves, calm down some of the speculators. So could be a win-win situation or win-win at least, showing that they are serious to intervene faster. And the second thing is that they are going to have a big green light of the US to do it. They won't be talked about being interventionists and going on into the penalty box with this US administration if they intervene.
No, absolutely, absolutely. So the warnings there, guys and girls. If you're trading the yen, you need to be very careful about what's going on. Listen to the comments from the officials that push the buttons. No, Ali, it's not the BOJ, it's the MOF who make the decision. It's the BOJ who pushes the buttons after being told to do so. Right, over to PM Takaichi. She says inflation is still fragile and continues to warn of the deflation risk. Says the recent inflation has been driven by food prices, and that putting back could hurt the economy, or that continuing could hurt the economy. Notes that Japan has not yet emerged from deflation. She also pledged to work with the BOJ to achieve wage-driven inflation, and that monetary policy needs to be for the economy and stable prices. She's apparently asking UAIDA for regular reports at their council meetings. Reuters has reported that there is a draft of the new fiscal plan, shall we say. There's no note of any amounts in it, so we're waiting to see how that works. But apparently, this increase in spending will happen without hesitation. And in that draft, it calls for bold and strategic investments. Now, we already know the sort of areas they're looking to target. Takeichi's looking to target. I think on reading it, Kay, yes, it may be big in size, but it's not just blanket. Here's a load of cash. It is going to be targeted. It's almost like Germany. They're going to, invest in certain areas. Now, in Germany, they dropped 500 billion investment, and the euro likes it. Over here, they drop something similar, and the yen doesn't like it. What's the difference?
The difference between Japan and Germany, because we have seen the effects of in Japan they need to fund everything. In Germany there has been this big thing, but we also heard from those, how much is it, 300 or so companies that also want to join the investment program, and that's maybe where the difference lies with Japan. In Japan, it's all going to come out of the government pot, or this Japanese Bank for Economic Improvement also, and because they seem seems that they will be called into action as well. It's all going to be public money, and yeah, it's the correlation as well between what's positive for Japanese companies pushing up the Nikkei and those low interest rates as well. It's a different kettle where you mix in different ingredients in Japan still compared to anywhere else. Because she did say that in Germany they target infrastructure, and then those companies adding to the spending or to the capex in Japan, companies will do it on their own. And we also know that the very big Japanese companies, they have production lines elsewhere, right? So take the car makers, the big machinery. Constructors, they have a big operation outside of Japan, where Germany is still much more producing locally, right?
Yeah, absolutely. Adam asks a pertinent question. Would there be any spillover effects to other currencies in the event of intervention? Yes, there would, depending on, well, if we look at their usual MO and intervention moves, it's usually good for anywhere from 250 to 400 pips in something like dollar yen. You're going to see a spillover into others. We can have a look at the chart. Let's have a look at clean chart. Okay, they diversify like the SMB would into other currencies after they've done their intervention, or they just put it on the books? I know you can.
No, the last interventions were sponsored by partially by sales in U.S. Treasuries, but they do have a very big FX reserve pot still. It's what is it? It's above $1 trillion. So I mean, don't worry too much for them. But they were partially sponsored by sales in FX in U.S. Treasuries last time around. The effect for other currencies is a bit of a naughty one. We can actually discuss both ways. I've been part of and trading a lot of those interventions in the past, and it really depends how they do it. Imagine that they go on it alone. You would have a bit of a spillover effect in other currencies, like de facto if you sell a lot of dollar yen, the rest of the market is getting those dollars, let's say, and they're probably going to sell some of those dollars versus other currencies. But it's only going to have a temporary effect. Where you can have a really naughty effect is if they would call in the Fed is still going to be okay. If it's only the Fed helping them out, still going to be dollar yen. The effect is going to be temporary on other currencies because in the end, still, I mean, the intervention is only in yen, right? It's not going to be in other currencies, but you're probably going to see another dip in dollar pairs, but then that's going to be kind of smoothen out. But the thing is if they start to call ECB into action, because you could have, like, if they start to call on the other central banks, and then I'm even thinking about the BIS, if they really want to stop the whole thing, then I mean, they are going to call ECB, BIS into action. For instance, mainly those three external central banks will be in the game. The problem is that ECB is based in euros, and if they call ECB into action, ECB is not going to sell dollar yen in the market unless they have been clearly instructed to do dollar yen, and then they will publish that. But if the ECB is called into action, they will actually sell euro yen. So you will have an effect where a euro could actually euro dollar could actually go down at the same time as dollar yen goes down. But then they will sterilize those euro interventions, because the Bank of Japan doesn't want to do euro yen, but they want to do dollar yen, right? And so they are going to buy all those euro dollars back from one of the German banks, probably, since they are based in Frankfurt, or some of the European banks. So that would be an absolute mess of a picture. But you could see euro dollar dump a big figure and then go 150 points higher on the back of it.
Yeah, but getting others involved would be a pretty serious situation. That would be a real,
and I don't think there's enough reason right now, because it's a yen. Well, yeah, you could actually argue that they may do some part of euro yen as well. I don't know. But I mean, the latest interventions have been clearly dollar yen driven, right?
Yeah.
So I mean, it's probably going to have a very short term effect on the dollar, but that it's usually it's coming back afterwards.
Yeah, I mean the moves back in that period, July they intervened. So, here's July in euro dollar, and we managed 200 pips, just over 250 pips, while dollar yen did that in the same period. Okay, so it all depends on how people are positioned in other pairs to see the reaction, Adam. So sometimes, yes, you may get a reaction in the euro, in the dollar, in whatever, but it's not always like for like. Like if dollar yen dumps 300 pips, it doesn't mean that euro dollar is going to rally or come off 300 pips in the same format. So yeah, you have to be careful as always. There will be knock-on effects, but if you see it go, worry about what the end's doing, and then worry about what everything else is doing after that.
Mm-hmm.
Right.
I could actually see one of the spillover effects could be gold doing another $100 higher. Because that's going to drive market participants even more into safe haven hedges.
Yeah. As you can see, there's euro yen pretty much doing exactly the same sort of moves as euro yen, dollar yen. So you can see the impacts, what happens in the yen, but it doesn't necessarily mean the same happens in the respective currency. This one came off a bit, whereas euro dollar went up. So different currencies, different positioning can all be affected different ways. Right, anyway, moving on from Japan, over in Australia, RBA's Jones says there's early signs of fragmentation in central bank gold holdings. He says there's a certain cohort of countries that basically explain all the increase in gold holdings from central banks, and clearly the risk of asset seizure sanctions is sitting behind some of that. So an interesting take on that as a reason why a lot of central banks are picking up gold at a hefty clip. Coming over to the UK, and last night there was a bit of political noise out of the UK. Apparently, there's people behind the scenes, other MPs, looking to put in a leadership contest or a leadership challenge against Starmer. That kicked things off last night. The press awash with all that, revolts and everything going on, the main culprit is the UK Health Minister, Wes Streeting, who's apparently the one who is looking to challenge Starmer, but he's come out denying that, saying he supports Starmer and rules out any challenge for the PM's job, which, as we know, nothing's official until it's officially denied. So we'll see how that one rolls off. It's not good for investors if we get a leadership challenge. It's not been good for investors, just the fact that we might get a leadership challenge, especially this news coming ahead of the budget. Because as the stories indicated yesterday, Starmer had a meeting with various investors who said that anyone else other than him and Reeves going into the budget or being responsible for the government would be market negative. So now Starmer's pretty much on the leash to markets from this point forward. We saw a little bit of a lift up in gilt yields this morning. The market not liking that news, and the pound's been a little bit softer as well today. So we'll see how this one continues. It may peter out now with that denial, or the old no smoke without fire might continue for a bit longer. So keep your eyes on that one. Over at the Bank of England, between them and the Chancellor or the Treasury, they've decided to cut their QE program called the APF, the Asset Purchase Facility. They're going to cut the maximum allowed to be put in that to 555 billion from 600 and just shy of 620 billion. Now, if I recall, the old limit in the first round of QE, I think, was 550 billion. It only got increased over COVID when they had to do more stuff like that. So we're 5 billion above where it was before, but that's the maximum amount that the BOE can do. Not that they're going to do it yet. JP Morgan's been the latest to change their rate cut calls. They now see 3 Bank of England rate cuts starting December and then coming in March and June. They previously forecast only 2 cuts, none for December. Those 2 coming in February and April. Just a story that's popped up just before the flow show started. Apparently, the UK's ONS, our stats office, is going to publish less official data as a means to try and restore the quality of said crappy data. Don't ask me how that's going to work. Either you can produce data or you can't, but they're going to produce less data, which is probably better for us. Less data, less mess. Over in France, Bank of France sees slight Q4 growth after they saw 0.5% growth in Q3. So still expecting some growth in Q4, though it's likely to be small. Bit of data out yesterday. Nothing major. The NFIB Small Business Optimism Index dipped to 98.2. Within those numbers, the plans of firms to employ people came down a touch, but CapEx investment rose. The bigger mover was expectations for the economy. That dropped 3 points in that index, so not much positivity seen in the future. Just keep an eye on some of these smaller data points for want of anything else. We got the weekly ADP number starting up again. That came in showing that for the 4 weeks to the 25th of October, there were 11,250 jobs lost. Pretty much everyone's scrabbling around to actually work out what that number means in the context of a monthly number. But anyway, the market didn't like that. And we were on the face show during it. We saw the dollar getting a bit of a whack on the back of that. Looked a bit of an overreaction. Kay, have you worked out what this, how this weekly stuff works into the monthly? I have no idea.
They must have hired some StatScan people, because in the statement itself it was completely contradictory. Because they first said they spoke about 40,000 or so, 42,000 or so creations, and then they talked about these showing that the monthly number could come in at minus 40 or 45,000. I mean, it was completely contradictory. Yeah, the market was just looking for an excuse, it seems, to do something. But we saw those moves being relatively quickly countered. We can't say it's like a massive move. Euro dollar is basically back to where we were before. Dollar yen is trading higher for the reasons we have been discussing. So often already. Cable's still on the defensive. Aussie doesn't know what it wants to do, same as the Kiwi. So yeah, well, a short-term blip. You did well to buy Dorian live over face yesterday. It was a very nice trade. I took what 20, 15, 20 pips on the euro dollar on the other side, and moving on, mate. Moving on from that number. But yeah, I mean, I think it's just showing that the market is dying to trade something right now, data wise.
Yeah, yeah, absolutely. Need to jump on anything. Yeah, Bran, we don't know when the data is going to be back yet. The shutdown stuff has progressed. It moved over one hurdle yesterday. The House Rules Committee, whatever the fuck those guys do, they pushed the bill forward, so it's gone up the chain. We still are waiting on the main vote today, but it's all looking good for the shutdown to end. I don't know if it ends instantly when they pass that vote, or if it's going to take a couple of days to get the wheels moving again, the cogs turning again. But today is going to be the key day for when we probably get final confirmation that we're at the end of the shutdown. Meanwhile, back at jobs, Goldman's were out with their guessing game. They reckon that the US economy lost 50,000 jobs in October. Who knows? We'll find out how good their seaweed is, or tea leaves. Economic advisor Hassett says we will be back at 3 to 4% growth pace by early next year. He's looking at the data as well. It says he's been told some economic surveys have not been completed, whichever ones they are. Mexico Economy Minister Ebrard says Mexico is working to conclude talks with the US in November. So that's probably the recent round of talks and tariff stuff, as opposed to full-on USMCA stuff, because those talks apparently got kicked to December. But we'll see what comes from that. We're in November now, a couple of weeks to go towards the end of the month, so maybe something's coming there, and might be one of the reasons why we're seeing a bit of strength in the old Mexican peso. Any other news, Kay?
We have covered everything and more, mate.
As always. Good. Like to get things covered. Right, let's see. Are we getting anything today of note? I haven't even checked this morning. We get the Red Book. Good old Red Book. So did we get the NBA? I think we get the NBA. Yeah, because it's the Mortgage Bankers Association. Yeah, so we should get that. Don't even know why I'm asking. So we'll get the NBA stuff, which is obviously a weekly number, and we'll get the Red Book, which is a retail sales number year on year that comes weekly as well. And apart from that, we'll have a ton of central bankers from the Fed talking. I know that there's a long list of those guys spouting forth, fortunately in the afternoon, so won't need to worry about that too much. Anything else you're looking for?
Yeah, we do have a 10-year note auction today. Looking at where we hang around in the 10 years, trying to make up its mind. It could be that ahead of a possible kicking the can a bit down the road, that there could be some decent interest perhaps on the 10-year note. So I wouldn't completely dismiss this week's one, and just have a look at what it does when it comes out. I'm not going to speculate on which side of the coin it could fall, but it may just be a bit of an interesting one.
Yeah, something to keep an eye on. That 3-year was all right. We'll see if a bigger 10-year does anything. As said, these yields are a little bit off. Obviously, the bond market was shut yesterday due to the holiday, so it's just reacting to all that, and its yields have opened up a little bit softer. Galaxy, yeah, that was we covered all that last week. The
Last
change of
week.
layers. The what?
Yeah, yeah, it's last week. I mean, it's just a rehash now in on in the media about all this. That job thing came out last week.
Yeah, and it wasn't that much of a shock because we'd already knew about 48,000 UPS layoffs, 14,000 or 30,000 depending on what press you read about Amazon, Paramount, Target. We'd already heard of a good chunk of that. So yeah, it wasn't a shock that we got a number like that last week, and it's par for the course. Really, we know the jobs market's softening. So yeah, not much of a shock, but that was last week's news, mate. Right, let's have a look around the ground. So looking at dollar yen, getting up towards that 155 area. This has been pretty much technical perfection. We broke this level, we retested the level, we bounced from the level. So this one should be going on for this. We've got up to a high of 91. 154.91. I've still got half a feeling, not that it matters anyway, that we might be seeing some barrier action or some corporate selling interest up into these big numbers because we haven't been up here for a few months. So this is going to be a real big test, this 155. Let's go on to a wider chart, perhaps. Might be easier. Let's go into a bigger one. Oh, come on. Push your buttons. So this 155 is a big old level, one of my big historical ones. If we break up there, it might be a quick trip up towards 146. 147 is yet another doozy, and it's one of those ones that goes, you have to keep going left, 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 left. It's another doozy up there as well. So, yeah, I think if we're busting this 155, we should probably go into intervention watch and be very careful about that. I'm long a little bit, as mentioned from yesterday, just a little overreaction trade. So I think I'm going to I'm waiting for 94s to carve some off, but I think if I don't see that, I'm going to carve down the position anyway. Just leave a little bit on to run for interest. But yeah, I think if we're busting 155, we should be very, very careful about the possibility of intervention. Dollar CAD, that's still making a fist at this 140 level. It's got the potential. We're hitting this door a few times now, and I don't like it. And the bounces are weak. The first time we still couldn't get through this 30s area. Back down now, we can't get through the 20s area. So it's looking a little bit iffy. I thought it might be going this morning just on this resistance here, but it bounced yet again. The old saying, a level's a level until it's not. But the more times we test here and the more times it holds, if we do get a break, the bigger that break is likely to be. Now, I've got my eyeballs down here on this 139.70s area, but if we go on holding this and then break it, I'm probably not going to touch it because we might well blow through there because there's going to be stops building every time people buy it off this level. So I wouldn't be surprised if we break, we go straight through there, or we stop there for 5 minutes before going through, and then we're heading down to the mid 39s or even down to the low 39s. So be very careful. We are definitely in rally sell mode after that Canadian jobs data last week. So if you're long in this, if you're playing off this 140, be careful. You need to be taking some profits if we hit our head on any of these levels. Because if we ain't getting above there, there's only one other way we can be going for that. Euro sterling, that had another little lock at the highs. Some 9 o'clock action, as pointed out by our Roomy James. Couldn't quite get up to this prior high, 29s, but we've hit this level, which is an age-old level of mine up here. Makes no difference, 27, 29. We are just trying to hold around these prior highs here. If we can do that, 15s to 20s, it will keep these highs in play. A bit like dollar yen. If we're not dipping too far, we keep knocking on the door, then we might get a push through. And if we do get a push through, it's probably going to push on a bit. The next area of resistance is up in this zone here. 60s to 70s, just this old traffic area, and it goes back a bit further as well. But for now, we've hit our head once again on this resistance. So just watch out. If we fail now, get back below 15, 10, we're probably going to just stay in the range that we've seen down to the 70s. Last one. Yeah, go on, mate.
Tomorrow. The
GDP.
follows.
Yeah. Yeah, that'll be interesting, because if it's poor and we break it, this level 25, 30, it's got to hold it.
Oh yeah,
that's going to be the key move. If we hold it, then we're off and running. If it's just a data print, pushes it up to 60s, 70s, or even 40s, and then quickly comes back below, then we're probably staying in the box for a bit. Ali, yeah.
I'm sorry. I think if it's weak, we go through, and we're going to have a look at 88, 89. Sorry, 88, 90, 89, somewhere around there. No, because the market is already not looking at it very positively towards the budget, and if you add on top a few negative numbers, it's probably going to go.
Yeah, and this political stuff going on, it's all roads pointing to the pound remaining weak, which is fine by us, mate, as we continue to ride this train for as long as we
Absolutely.
can. Ali, no, I'm not looking to sell the level. I'm not looking to go short dollar yen 155. I'm long from yesterday, so I'm looking to take profit up there. Now, where are we going? Dollar mix. That's where we're going. This one was a complete turnaround. We couldn't do anything for ages in terms of trying to test this bottom area, and now this full smooth out of the 1850s, which I got smacked on trying it against there, has now sent us all the way down, and for all intents and purposes, we could be getting a look at the bottom of the box, bottom of the zone, which I might have a little nibble at. Kay, what's behind this one? Is it just dollar weakness? Is it the possibility of Mexico getting something on this trade stuff? It seems a complete switch around, a 180.
Yeah, looks like and it actually got accentuated by after the Banksy call already, last week. I think them going on neutral means that the market is still looking at a 7.25% interest rate over there. I've got the impression it's more. And by the way, Mexican yen is a carry trader. Let's not forget that as well.
Yeah.
So one may have to do with the other as well. Because the Japanese do, because we know from historic washouts that they do have a piece of Mexican yen in the books as well. So that may have helped. Break below 1850. Yeah, probably just the market not really wanting to stay short mix for longer, and because it's biting if you're short Mexican peso. Versus apart from the rent, it's going to cost you money all the time. So I think that's one and all has to do with that. But if you look at the latest range, we are still inside, right?
Yeah, very much so. Hence why I'm looking to give it a go long here. If we hit that level, it was, technically it bounced off the 61.8. It was an old level as well. You can't see it's behind the fib. But yeah, it's a good level worth a test, I think. But if we're breaking there, I think it could be curtains, and we're going to see a decent leg lower. We should be down at 18 pretty quickly. I wouldn't be surprised if we're through there and heading on another leg. But then we could just do this, have a little break, find another little phase, and do the similar here. So it's going to be interesting. But I think anyone who's been long off of these lows, there's going to be again a ton of stops sitting below this level, so it's could be a bit of a maker or breaker for that one. Right, going to throw it over, mate.
Yeah, just a quick look. The first thing that we need to look at, because we are coming into very important levels and big levels on the long, a big one on the long term. As we can see, this is the weekly in euro, and I've been speaking about it already. this is the creation of the euro, right? Right around that higher from there. It went downhill in the euro, oh, and also the yen. Yen was really in deflation and was strengthening all the time. But we are nearly there. 117. This just under 180. Obviously, we can have a rush through if there's no interventions on the horizon. We're probably going to push through. But this looks to me, particularly because on the dollar yen we have done higher, but this is something that may be looked at because it is really the all-time high and a bit of a trend line resistance there on the euro side of things as well. So 179.60, call it 179.70, something like that. Just keep that line in mind, okay? As we may see a bit of a rush through if it comes, but then perhaps a little failure, and especially also look at, and that's what I'm doing at least, looking at taking. I'm actually going to take profit if we get up there because we are also running up to the top end of the channel that we have been in since August in the euro yen, and the top end of that channel comes around there as well. So I'll be a happy camper, take profits on that euro yen, and then we will see we will see what happens. It's not that I'm getting overly nervous because I'm protected with my trading stops on the euro yen as I usually do. So it's not going to cost me anything, but I'll be a happy take profit seller up there and then see what happens. Okay, it's a slightly different picture than the dollar yen. Cable, as I mentioned yesterday, 131.85 ish. It has proven to be a resistance, and we've tried it again yesterday afternoon, and and we didn't reach it right there. This is the 23.6 or the 38.2 of that. Only the mid-October, start of November decline. Okay, nothing bigger. It's just like the shorter term. This 130, is a bit of a longer term, but we are like really wishy-washy around it. We're back on that 130, here, which held yesterday, but today it's looking a bit fragile because the sterling itself is not doing too well. So I would say there is a possibility over the day because the dollar is crawling back some. A possibility on the day to go revisit 130.95, which is also the low here, potentially even down to the mid 130s. But it's, I would say, if ever we get down in this zone somewhere, it could be enough ahead of tomorrow's GDP. Okay, and then tomorrow, obviously, with that GDP, manufacturing production, industrial production, what else not coming out? Trade balance, construction output, etc., business investment, you name it. There's a slew of data coming out of the UK tomorrow, and then we just take the eraser and see what is going to happen then. And as we have already discussed with Ryan before, if that's negative for if that's a negative for the UK, cable could actually drop all the way back down to at least this 130 figure 10, and then see what happens around there if the numbers would be negative. Same thing as we discussed on the euro. On the euro sterling, it could absolutely go for another flyer. Yesterday tried but failed on the euro dollar. Little try above 116, capped, keeps. It did break back a bit above, but you know what I'm thinking about, those steeper trend lines when they really come to market instead of the market really going back to it. It would have been stronger, I think, if we would have a less of a slope to this channel. But anyway, tried a bit above the 61.8 as well, and then came back down, capped by this trend line as well that has been forming since August. We see when we broke here, had a pretty serious move. We went very close, and then yesterday as well, we tried. It's just coming in around 116. We tried, and we failed again. So that keeps it in a mildly negative bias, I would say. But stressing also the importance of the 116. Okay, so if ever 116 goes, I think it could be a bit of a more rapid move that we see in the euro dollar. And then in the meantime, we are looking back at what's happening around 115.40, because that has been showing up a lot of times now already. So 115.40, there's definitely a bit of interest in the market as well, for as long as that holds just a 50-60 points range, which is also still supported by low vols in very low euro dollar vols as well, especially in the short end of the vol picture. And we're actually ticked up just slightly from very low fives in the 1 and the 2 weeks. I think that has to do with the outlook for the end of the shutdown. Maybe people buying a few more options and then seeing what's happening on the end of the shutdown. Moving over to gold and silver, I'd call it relentless again, because the bids over the past 15, 18 hours have been like really, it didn't even grant us a look at this 40, 60, 75 in gold straight away. Any dip under 41 has been bought. So that to me still keeps the short-term bias quite supportive. Obviously, there's more waiting on the top side around 42, but the fact that over the past 2 days, and then here as well, with the outlook of a potential end to the shutdown, that it's still bid, it's still a buy on dips, this gold. There's no two other ways about it, unless we start to break below 40, 60, 75. Then we're probably going to have a look at the 4,000 again. But this looks very big to me still. Silver, same thing. Actually, even a much cleaner move than even in gold. It doesn't look back, and we are on our way to that 52.5 zone, which I mentioned yesterday as well. 51 is already around 51. Give and take 10 cents, right? It's silver moves more than just going to tag a point and then holds right there. Give it a bit of leeway, but this 51 zone could already show up as being a support. Still very, very, very supportive, this one. Let's see what happens if we get up to that 52 and a half, because it could mean just that we are going back to the prior highs in silver there. What else you guys want to have a look at quickly before? Oh, no. I think we need to call it a day, because I'm looking at the clock. Just watch this one. We have been since the start of a week in a bit of a range here on the Aussie dollar. It shyly did try to move outside of it, but we are back in the box. Interesting is that it's very, very tight, so there may be a bit of optionality here in that little zone, keeping it very, very tight on the Aussie dollar. It could mean that the next break up or down could be a little more significant, but we are still in very in range territory here. Okay, on that Aussie, and the Kiwi is looking pretty much the same. Still not finding too many friends either. And that's it for today. Back over to you, Ryan.
Thank you very much, sir. Good stuff as always. Thank you, everyone, for coming to the Flow Show. Do enjoy the rest of your day. We'll catch you all on Face later. Keep an eye on Japanese stuff, any interventions, and we will see you tomorrow. Have a good one.